esteemed listeners and investors. You're welcome to another Monday morning breakfast session. I am Akiyemi Omotayo, and I'll be taking you through the income market review, the happenings of last week, and what we can expect this week. Without further ado, let's dive in. Looking at the money market and treasury bills, we can see system liquidity eased from 1.4 trillion to 663 billion. As a result, we saw funding rates reduced from 45 basis points to 8 basis points on the open repo market and overnight, respectively. Treasury bills market closed bearish due to the Nigerian Treasury bills auction that held last week, following the primary market results where rates went up, resulting to an increase in the yield. Yield advanced by an average of 57 basis points week on week to 23.33% at the end of the week. The OMO secondary market closed the week on a bullish note, with yield declining by an average of 12 basis points to close at 24.4%. At the table below, these are the results from the Nigerian Treasury bills primary market. We can see that at the last Nigerian Treasury bills primary market auction, where 1.66 billion was an offer and a total subscription of 308 billion. Eventually, 207 billion was allotted. At the close of the option, as we can see from the table, the swap rates remained flat at 1.63% and 1.4% for 91 days and 182 days, respectively. And on the 1 year, rates increased from 20.68 to 21.24. Looking at the bond market closed on a bearish note amidst the sell-off. Amidst sell-offs, sell-offs witnessed at the short end of the curve due to the tight market liquidity. And on a tenor basis, looking at the curve, yields across the short end of the curve advanced by an average of 85 basis points week on week, while the mid to long end of the curve advanced by 23 basis points. Maturities that were actively traded were the 2025, 2026, 2027, 2028, 2031, 2033, and 2053. Looking at the foreign exchange market, the Naira has continued to witness depreciation. As we can see, the NAFEM rate as at 12th of July closed at 1,563.80 when compared to the previous week at 1,509. This is a call on our government to provide a lasting solution to address this continuous depreciation in Naira. The outlook for the week, the funding rates are expected to remain elevated on the back of expected outflows from the system in the absence of significant inflows. Also, the Treasury bill secondary market is expected to trade in line with system liquidity, as well as the bond secondary market is expected to trade in line with system liquidity. That being said, we implore our investors to take advantage of our wide array of products, from our fixed income fund to our lead balance fund for those who have a flair for equities, also those who want to invest in FX and want to diversify their portfolio to hedge against the depreciating Naira can take advantage of our lead dollar fund and our Euro bonds. Thank you very much. That being said, let me hand over to our seasoned in-house trader, Mr. Taufik Akolade, to take us around the world of equities.
Okay, Mr. Tayo, for that insight into the fixed income and money markets. So good morning once again, our valued customers. We're looking at what actually transpired in our equities market in the course of last week. We saw all share index coming down by minus 3.5 basis points. So we were before at 100,022.0 basis points because of what actually happened last week during the week. During the 5 trading days of last week, 4 days dominated a bearish trend. Monday, Tuesday, Wednesday, and Thursday. It was on Friday we saw some movement in the all share index by 0.2 basis points because we saw some renewed buy interest in some utilized stocks in oil and gas. Eternal oil moved up. Besides, we saw Vitafoam renewed buy interest. We also saw a huge volume transaction in Fidelity Bank and GTB and a few other companies. So in terms of trade turnover, we did 2.7 billion unit of shares worth 85 billion. The capitalization or the value was very high when we compared that to what we did in the previous week, close over 50 billion. And in terms of the unit as well, We also did 2.765, higher than the previous week, about over 500 million units. So looking at the contribution of the financial service sector, they contributed 16.42% to the volume and then 20.54% to the total value of the transaction. And I've said that Fidelity Bank, Elanix, GTB, they were the key players in the market in the course of last week. So in terms of our sectoral performance, we also realized that in the course of the week, out of the 5 major indices under our coverage, two indices gained. Oil and gas, because the renewable interest we saw in eternal oil, that moved that index up. And then we also saw renewable interest in Coatis and then Vitafoam, which these two companies are other industrial segments. So that was the reason why those two companies moved the index up by 0.05%, while the other one, consumer, we saw profit taking in Guinness, in Champions Brewery, and a few other companies on that segment of the market, the safety insurance. And we also saw profit taking dominating the banking index in the course of last week. A lot of people were taking profit across the tier 1 and the tier 2 banks. So that was the reason why the all-share index now moderated to, the year-to-date performance has also moderated to 33.30%. And our month-to-date performance, we are currently at 0.39%. Our quarter to date, that's for the second quarter, for the third quarter, sorry, we're also at 3.0%. So this morning, I think because we've seen a public offering and right issue coming up, and then we've been seeing questions across board as to whether people should take advantage of the right issue or the public offering. So this morning, we're going to do more insight into our position on some of these companies that are willing to raise capital. If you look at this slide, it's just talking about various banks we have, the tier 1 banks, Access Bank, the share capital plus share premium capital, share premium account is currently at 52.51 billion. So if you look at the shortfall, because they still want to maintain the national banking license, they'll be raising about 248 billion. Bank also wants to maintain the national banking license, 146 billion, because their share capital was higher than the other banks. FCMB, First Bank, GTB, and a few other companies. So we are expecting in the course of the markets that the capital to be raised by the commercial bank will be over 2 trillion. Between now and the time being given to all the commercial banks, that they should recapitalize to the tune of 500 billion, 200 billion, and 50 billion, according to the international banking license, national banking license, and regional banking license. So currently, 3 companies or 3 banks that have also indicated to raise money. But we try to extract what is going to be the post-capitalization impact of all these banks on the shareholders. Should they buy or should they hold on to the right issue and public offering? If you look at the Access Bank, their current outstanding shares is 35.5 billion, and the bank is going to raise additional 17.7 billion within the market to meet up with 50 billion. By the time they do that, 17.7 billion plus 35.5 billion, that will take their outstanding share capital to 53.2 billion. And then the new market capitalization, post-capitalization, is likely to be over 1 trillion. As at the last dividends per share, which they paid, combination of interim and final, they did 180 naira kobo and then 30 kobo. That gave about 210 kobo. But if you look at the circular being set by all these companies that want to raise money, you cannot see any forecast in the next 5 years forecast. What we could see from the circular or from the offer document is about the last 5 years performance of all these banks. And then we could see that we have to take a step further by doing some extrapolation for us to be able to see what is likely to happen. So our extrapolation from the Access Bank performance for the Q1 of 2024, focusing on the core banking operation, income that is coming from the core banking business. We didn't factor in exceptional items, which comes occasionally for the core banking operation. So we did that extrapolation, and then we projected that for the year 2024, Access Bank Financial is likely they're going to make a profit after tax of 637 billion, and then that will take, if you compare that to the current outstanding shares, their earnings per share will still stand at 11.95 kobo, and earnings yield will still stand at 62.73, and then dividend yield will be around 11.02, P/E ratio 1.59, which is still higher than the industry average. And in our recommendation, we're also placing buy. There are several metrics you can use to actually judge or measure what is going to be the post-capitalization. So the Access Bank, we are still recommending. So we are showing all our value customers, pick up your rights. But we have said it before now that if it's trading below the right price, we may even consider buying for some of the customers that have indicated interest in the market. And that's exactly what is playing out. The right price is 19.75 kobo and it's currently trading at 19.05 kobo. We're still going to communicate further to you on that. In the case of Fidelity Bank, their current price as at Friday stood at 60 kobo, and outstanding shares of Fidelity Bank currently stood at 32 billion. They're also going to create or issue additional 13.2 billion. And then that will take the outstanding shares, new outstanding shares to 45.2 billion. By the time you look at the capitalization, it's going to go to over 400 billion. And then the latest dividend per share of Fidelity Bank as at final year of 2023 stood at 85 kobo, 65 kobo, and 20 kobo interim and final. So we are also projected their financial performance for 2024 based on extrapolation we have done from their Q1 performance from the core banking operation, interest coming from the core banking operation. We are expecting that at the end of financial 2024, we projected their profit after tax to go to 125.76 billion, and then the earnings per share will stand at 2.78 kobo. Earnings yield will stand at 26.24 kobo, and the dividend will be around 8%. And in our recommendation, we are also advising you can also take advantage of the current Fidelity Bank public offering and the right issue. Why for the GTB? GTB closed 45.50 kobo on Friday, and then the outstanding shares of GTB currently stood at 29.4 billion. They're also going to raise additional 9 billion units of shares. By the time you add that to outstanding share, that will take it to the 38.43 billion. And then we are expecting market capitalization of the GTB to move above 1 trillion, going close to 2 trillion, based on the current market price. And then the latest dividend per shares of a Fidelity as a GTB stood at 2.20 kobo. Don't forget they paid 2.70 kobo final and interim 50 kobo. And then their projected performance, of course, their performance for the Q1 was very, very superlative. But we did not factor in exceptional income into that performance because it comes not all the time. So if you want to do a real analysis, you may not actually consider that. But if it comes, it's a bonus to the investor because it will take the share capital, the performance or the profit after tax up. So looking at the core banking operations of the GTB, we projected their profit after tax for the 2024 financials to be 833 billion. And then their earnings per share at the end of financial year of 2024 will stand at 21.7, 21.70 kobo, and the earnings yield should be 48.11, and the dividend yields we're also expecting dividends of 7 naira 10 kobo. 7.0 dividend yield of 7.1%, and then the P ratio 0.08. In our recommendation, we're also placing buy. So for all our value customers, the three public offering and right issue that have come into the market, the Access Bank, Fidelity Bank, we are giving you the assurance that you can buy based on these key metrics to measure whether it's a buy or it's a sell or hold. But for now, we have to give that clarification because there have been questions whether people should buy or people should not buy. But the three banks we have seen so far, we have been able to project their performance of 2024, and they are good to go. So when we see other ones that they are coming, we're also going to stray and do a focus on their 2024. Because other ones are still coming, the likes of Wema, Fidelity, FCMB, they're all coming to the market. But the one who advise you to buy, we're going to do an analysis and I'll give you clear-cut guidance on that. So that is for the insight into the banking public offering. It's still ongoing. We're encouraging you to fill all your forms, submit to us, and fund your account. So before the close of the offer or the right issue, we are going to reach out to you, even if we're going to buy from you from the market, because when the price are traded at a deep discount in the market, we'd rather buy for you to increase your holding. That'll be better for you. So we will do that. This is just analysis of the Q1 performance with the selected banks. So by the time we hold our webinar for the July edition, we're going to explain better and drill more on our position on various Q1 performance of this of the banks and other sectors. So our recommendation for this week, we have also adjusted all various prices, updated it. So 1 to 20, our recommendation: Access, Fidelity, GTB, Sterling Bank, UCAP, UBA, Citibank, ICO, Master Insurance, and a few others. 1 to 20, they are buy recommendations, and there are various reasons. You see the upside potential, you see target price, you see 52 weeks. We use various metrics to get to this level. And then our old recommendation, 21 to 29, they are also our old recommendation. The likes of Dangote Sugar, the likes of Dangote Sugar, Corn Oil, FPN, Stanbic, Flour Mill, Guinness, Okomo Oil, Presco, NEM Insurance, Eternal Oil. They are under recommendation for this week. We may change it next week. It's not static. It depends on what is happening in the market in terms of information, in terms of corporate results, corporate action. They determine rating of various companies that are listed in our market. Right 31 to 33, we're also placing them on sale. MRS, we place it on sale. Airtel Africa is also sell, and the Boa Food is also there because they're overpriced. So we are encouraging you, you can take advantage of that. So in our various edition, in our weekly top recommendation, if there are any changes in the course of the week as a result of information coming into the market, then we're going to change the rating, and then we're likely to change upside potentials. Our expectation and projection for the week, we saw heavy trading in Fidelity Bank last week as investors reposition their holdings, given ongoing right issue and public offering. So that was the kind of major activity. Predict local equities, we still have mixed mood this week, with progressive fluctuation in investor appetite throughout the week. But generally, we are also expecting a positive trend in the course of the week. We believe investors will be looking for better deals this week as they try to take advantage of the cheap equity. Some companies are still very cheap in the market. We saw what happened to Cooties. They declared bonus of 1-for-1, dividend of 15 kobo. When such actions come to the market, you see people trying to buy more in the market because it's very strong. That's what investors are wanting. And then we also expect recovery in some stock that saw price drop in the previous week. Furthermore, we anticipate market will benefit from the bank announcing their plan to raise fresh capital. And we do not completely rule out the profit taking in the market. It happens. You see in some tickers, people will take advantage of profit taking, especially for the tickers that have gained substantially in the meantime. So, but finally, we anticipate equities market will still close in the green zone with marginal basis points. And do also forget that so about almost 8 companies were also delisted for not meeting up their requirement with the NGS. And a few other ones that Lasaco and all that, they also contributed to the downward trend or the bearish trend the market witnessed in the course of last week. So this is the time for question and answer on this presentation across fixed income and then our equities market. Thank you once again, all the valued customers. The floor is open for the question. Okay, thank you. Somebody is asking question. Dilution is fair of investors that have bank. Can profits, okay, can the profits support this? If you look at what we did the analysis, it supports that. The dilution, of course, there'll be dilution. But they don't also forget that they are going to have more funds to also play in the market. And then from what we have seen in the first quarter, we have also extrapolated, and we have seen that the banks that lost, they are likely to sustain their performance in terms of profit after tax. So with additional capital, with additional issue share capital, and then moving up their profit after tax, there's no way the average dividends yield coming or any per share of this bank will still not support what they have been paying in the last 3-4 years. So there's no cause for alarm. So that was the analysis we did in one of the graphs about the insight into the banks that are coming out to raise money. As per the Chapo Idena recommendation, okay, sorry. As per Chapo Idena, Access Bank, hydrogen payments, pension, we do not see those. Okay. As per Chapo Idena recommendation, Access as hydrogen payment system company, pension, we don't see this in their financial. They are there because all these banks, they have also taken up some asset management. It's there. So, but if you, we'll reach out to you, we'll send it so that you see it. But in one of the things we have seen, it's under one of the companies under the Access Bank subsidiary. They are into pension, they are into asset management, and that's the payment system. It's part of their company, one of their subsidiaries. And then it's also going to increase, add to the income that is coming to the company. So please, the floor is open for the question. Okay, somebody said, please share it with the investor. You will get it after this presentation so that you can see those slides we've presented. If there are other clarification, you can reach out to us. We're always open for a question and answer. Okay. Hi, please. Do you have anybody that wants to talk?
Hello, my hands are raised. Hello.
Okay, go ahead, sir.
Okay, yeah. It's good that you are positive on the banking recapitalization, but my concern, which I also want to hear your view on, is the likelihood of share reconstruction, because as you stated in your presentation, some of the banks we have as much as 50 to 70 billion units of shares. So, and when shares are reconstructed like that, is it not likely to affect the price? Because can you also consider the option of us waiting till when they have recapitalized to some level and the share price has found a stability level before we consider entering, instead of buying at a high price, and when it is reconstructed, price start going down and putting us at a disadvantage? I just want to hear your view.
Okay, sir. Thank you, sir. In terms of reconstruction, well, it depends. We cannot rule out the reconstruction exercise in the world in our market. But what is very important for you to know is that even if they are reconstructing, for example, if a stock is trading 5 naira and the company wants to reconstruct to 1 for every 4, meaning that the price of 5 naira will be reconstructed to 20 naira, because if you're having 5 naira for one stock, now they now reconstruct, it has now been reconstructed to 1 for 4, meaning that the price is going to change. It's only the outstanding shares that will reduce. If outstanding shares reduce to 1, from 4 to 1, the price will also move to 20 naira. So it has not really affected you. You are still maintaining the same price. The only thing that has changed is just the unit you have. So there's no cause for alarm. So if they reconstruct, once the companies are doing well, so the valuation and the key metrics we have put in place, they are what you need to use to judge whether this company they are buy or they are hold or you are to sell, as we have seen it in our daily recommendation. So what we have done so far is to explain what is likely to be the impact of the recapitalization for the share outstandings. So that's just it. It will not have reconstruction is possible, but it will not affect the value of the shares, the price of the shares going forward. And then somebody is asking, price is really ugly and held again as Naira continue to fall. What is the implication on the manufacturing companies and banks' capital adequacy? What for the banks, for the manufacturing, now we've seen we've seen the performance of the manufacturing companies in the 2023. They were mostly affected by foreign exchange. So and then we have not been able to address that as a nation, because if you look at the 2024 budget, our projection for the oil is about 1.75 billion barrels per day. What are we doing? We are doing less than 1.3 billion. Our inflation in the assumptions of 2024 budget, we are looking at 21.08. What's current inflation? We are also, there are so many assumptions that are not really working in the budget and some of the things the federal government has put in place. So manufacturing companies, we will see their second quarter result, but I think some of them, they're also finding a way to navigate around investing heavily in backward integration to mitigate the impact of foreign exchange losses. Because if they don't bring out those strategies, foreign exchange stability, we don't have control over it until we are able to increase the supply to the foreign exchange market. So that's it. So it will affect them. And for the banks, banks usually benefit from foreign exchange gains because they have also invested in some instruments that are not naira denominated but dollar denominated. So if it continue, naira continue to devaluate, it's a gain to the banks. But manufacturing company will suffer because they have to source their raw materials. Or somebody is asking, what is that in oil and gas space? How far with Owando? Well, I think they were in court on Friday. We're trying to get the information, but yet we have not. But we are going to talk to 1 or 2 people today, whether that court action would or not, because they were supposed to be in court. That was the reason we didn't place in any of our recommendation. It's still under review because it's in the court. But the likes of Total, Seplat, they have formed part of our recommendation for you to buy. But Owando, please just say action. Okay, somebody said, when my bank right issue, which I compared to last December, and not yet been allocated to me, where Mr. Ola, our registrar unit will take it up, and we'll reach out to the GTL registrar to find out. I think some people have been credited, so your name will be noted, sir. Okay. Okay, where are we with Seplat and ExxonMobil? Well, the transaction, I think, is awaiting the what do you call it? It has been approved. I think it's awaiting the minister to append the signature on the document. Or it has actually gone up significantly. I think they're about over 80-90%. It's just an approval, final approval from the Federal Ministry of Petroleum. What will be your projection for share on the upcoming balance sheet? We expect that balance sheet to be very robust, to be very superlative. So, but when we see the second quarter result, we expect that the Seplat should do very well because of the acquisition of the ExxonMobil. Okay. Okay, somebody is asking, how do NSE absorb the new volume of shares from the ExxonMobil? Explain to the investors. Please, how do NSE absorb the new volume of shares from ExxonMobil? There's no, what I think from my own understanding, it's not as if the what they call it, the Seplat is going to, Mobil is not listed. ExxonMobil is different from the Mobil Nigeria. So the Mobil Nigeria, which is 11 PLC, is listed on NES, not on our NGX. So it has nothing to do with NSE new listing. Okay, somebody is asking, please, what percentage of assets value be come from the volume operations? Well, because of time, we won't be able to dwell more on that. By the time we hold our webinar from 26th of July this month, we're going to talk more on that. You see various financials. Thank you. Okay, please mute the Mr. Abdulmalik.
Mr. Whitebo, you can ask a question now, sir. A meeting.
It's sorry, he already responded to it. He said on 26th of this month.
Okay, thank you very much, sir.
Details will come on that.
Okay, somebody said, I want to sell my app rights, sell my SSPAN rights. How do I go about it? Okay, please, your name is not shown on the Q&A chat. Please let us know your name so that we can reach out to you. Or you can send us an email, customerservice@capitalng.com. Send us an email, we'll reach out to you. We'll tell you the process to sell your rights. We've answered that. Okay, thank you. Okay. Please, on the fixed income side, what's the direction of the yield curve? What is the implication?
Okay, on the fixed income side, what's the direction of the yield curve and what implication will it have on the existing yields and future FGN offering? So basically, we've always emphasized this. We've noticed the pattern in the past 2 to 3 months that focus has been more on the short end of the curve, and that is largely due to the funds at the auction. We see that since January this year, the focus has been on the 29s, 28, 29s, and then the longest on auction has been 33s. So what that simply tells us is that the focus will continue to be geared towards that end, as most investors would seize the opportunity to buy directly from the primary markets as against going to the secondary market. So the yield curve is still expected to be abnormal for now. The ideal thing is the yield curve should have an upward slope from the left to the right, like that, an upward, northward slope. So, but then that is not the case now with the short end still being elevated and the long end of the tunnel. So, but as long as this direction by the DMO continues, we would continue to see attention towards the short end of the curve. But then I think that with the environment we have currently, where inflation is galloping, I think that's actually a very good move, and I believe that is what the DMO is also looking at. Why should investors be looking at the long end of the curve when we're not so sure of what inflation would be in the near future term? So I think the DMO is also looking at how to get investors to participate in the market by offering them short-term securities that can also help them hedge against future inflation. So the implication is that we'll continue to see that play out at least until inflation is being moderated to a reasonable extent. then possibly we can then see attention shifting to the mid or the long end of the curve. Thank you.
Okay, we have come to the end of this section. We want to thank all our valued customers for their loyalties once again. It felt our passion. We thank you for choosing us again and again. Thank you very much. So the webinar slide presentation will be forwarded to all our valued customers before the close of the business. Thank you very much. Do have a beautiful day. Thank you.